Okay, so plus one, minus one. We talk a lot about plus one, minus one, and it is like a cool concept and all this stuff like that. But today we are going through something very different with plus one, minus one, a very advanced form of it. So first off, to start saying plus one, minus one is what we would refer to as an application-based set of knowledge, not a theory-based set of knowledge. Like a theory-based set of knowledge would be a hold level. Like here's a hold level, and do we either buy it, yes or no, right? Black and white. Plus one, minus one, prior to this moment was the same thing. It was theory-based. We would say, okay, we have a daily time frame. The plus one is a weekly, and the minus one would be the 4 hour, right? So that's fine. This would be theory-based, but actually in reality, plus one, minus one is application-based, meaning that there is a different form and application that it has for different parts of our charts. Like you can have a plus one time frame from the daily, which is the weekly, which has a different implication. But today I want to teach you what it means to use plus one, minus one against polarity. And again, plus one, minus one is application based because the way in which we use it changes based on how we're using it. So we have a level here, and we're going to use a weekly on purpose, just because I'm going to show you a weekly example, and then we're going to get into a bunch of other examples. So we have a weekly level, and typically you'd say plus one, minus one, monthly, daily, right? But actually, we can use this differently if we say that we have a minus one, which would be the daily, and that has a plus one, minus one target. So actually, inside of your weekly time frame, you would actually have a plus one, minus one target, and they would both be the time frame below it. So you would have, say, weekly polarity, for example, and then you would have the plus one, which would be here, which would be the daily, which was the time frame below it, protecting the level, and then the minus one, which would also be the daily that is breaking the level. So oftentimes we see like here's a point of polarity, and again, remember this is plus one, minus one theory application wise against polarity. So we would have the weekly level here, and the target down would be the daily. So you'd have a point of it that's, if we were going short, we would have the plus one would be here if we wanted to short. If we wanted to long, the plus one would be here. So this is the first thing I want to kind of clear up, is that the way in which we say plus or minus isn't specific to this side or this side. Like this is always minus and this is always plus. Plus one, minus one communicates our interest to see which way we want it to go. So if we were going to long, for example, like if we were right here and we said we want to long this target because we think this is going to break, our plus one target would be here, right? So our plus one would be here, meaning that we are going plus and above where we need to break. If we wanted to short, this would actually be our plus on the opposite, and we were, price was right here, and we say I'm interested in shorting the weekly polarity. I'm going after the plus one short target, which would communicate, like in this case we have, what is this, 26,101. So the first thing we need to, like when we're talking about plus one, minus one, so there's no confusion, is that plus and minus actually is just relative to our interest. It has no direct bearing. Like a hold level is extremely theory based. Here is a hold level, and we are using this, and there's no confusing it to say, oh, this was the deep dive target. Just kidding. Haha, it was the hold level. I meant this, or sorry, this level here. No, when we say plus one, minus one against polarity, we are communicating our interest. So again, if we were to short, this would be the plus target for the short. If we were to long, this would be the plus target to long, right? So that's just an important distinction to make, so there's no confusion about, oh, he's saying plus here and minus there and blah, blah, blah. Again, it just communicates our interest specifically. So whenever we have any time frame, we can say, hey, we've got like a weekly polarity, and identifying polarity is the first point. Time frame down, we have a target that breaks that and a target that holds that. So very often in trading, we see trends that work like this, and we go above the trend, right? So you go above the trend, and then you back test that trend, hold it, and move up. Like this is a very common occurrence. Or you have like a backside valley where you have something like this, and then it goes like that, creates an origin level, and then breaks above it, right? And you're like, oh my God, I need to rebuy this level. It's perfect. It's the back test of polarity. If that holds, it skyrockets up, right? Like this is about identifying polarity with the plus one, minus one. And how many times we see some form of polarity back test, and it's like the perfect move, right? And it's like, oh my God, backside, broke above it, origin level, back test, perfect entry, blah, 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 right? So there's a way in which we look at polarity and plus one, minus one. And then from this point on, you have, say we wanted to short, like this is, we're down here, we want to short this price. This also has a trail effect of its own plus and minuses, right? So then this would have an effect of like this. Oh, we have the 4 hour that breaks that and protects it, right? So then, and then inside of this 4 hour, you would have another +1, -1, but they would both be on that time frame. So you can see where the weekly has the +1, -1 daily. That daily derives down to +1, -1, depending on if you're wanting to short or long. Again, your interest based specific, not +1, -1 specific, because this is an application based theory. This has its own 4 hour, which derives down to the hourlies and so forth. So it's really interesting when we think of +1, -1 in terms of polarity. So what I'm going to do is I'm going to go show you an example here. And this is the weekly level here. So you have, if you've been following me for long enough, you would have seen that like back down in here, we were talking about like, oh, this is going to go up to, 64,000. And then, all of a sudden, we see this moment in the charts here. And this was like picture perfect moment. So back in January, when we created this first accumulation candle way back in the day, I was like, yep, now we're going to go to 64,600. And there's a different reason why that was this very specific target, which I probably won't ever share with the world, but maybe I will one day, who knows. But anyways, if you were watching me a few years ago and I said like at this moment when we had this 30,000 pullback, I said 64.6 was a target, and then 29.2 was always going to be the target on the bottom. So like in this moment, that was already predefined. So like you skip forward in time, and that's when all those famous clips of me came out, and it was like, oh yeah, this guy called the top back when it was 30K, and there's a reason for that. And then he called the pullback bottom, and it was like this perfect kind of thing, because it was very simple. That was like the polarity range that was to be created, and 29.2 had always become the perfect level. Like 29.240 was always the level. Like I don't know how many times we talked about this over the years, 29.2. So anyways, that's your perfect polarity. So like when you actually look at this chart and you flip this upside down, it's just like, dude, look at this origin level. I don't care if these are 1 minute candles, if these are weekly candles, it doesn't matter. It's just like, dude, I need to buy this. Like this thing is crazy. Look at this polarity, dude. Like the origin level, biggest time frame available. Test it once, test it twice, test it 3 times, goes, breaks above it. Dude, I need to re-enter this polarity, because if this thing holds, dude, this is fucking gone. Like this thing is this, like it's gonna hit these crazy levels. And like this is such a common occurrence in our charts when and like I don't care about what these numbers are on the right side of the screen, the price. I just care about the raw theory. And this is your backside polarity, and you broke above it, and now like the perfect re-entry to long. Well, in reality, this is short because our charts are flipped upside down. But in our case here, it's like, oh my God, look at this perfect target. But then you have to realize that there's a +1 -1 application to this. So this is also something you will have commonly seen where you're like, oh my God, dude, we just broke a 15-minute origin. Or sorry, we just broke above a 15-minute origin. We need to go back test this because this is perfect entry. So you have 3 occurrences here. You have the occurrence where you hit the level and it's perfect entry, and you bounce and move up. And it's like, wow, dude, that's crazy. You also have the next occurrence where we often say, oh my God, polarity got front run. How many times I've heard that? Or, and the reality is what that did is it went after the -1 target to polarity, which is the daily, because you're always moving down. You're never, when it comes to polarity, we're never adding the monthly. We always move down one time frame to find, this is the weekly, what's the -1 that's protecting it, and the -1 that's breaking it, right? And instance number 3 is, oh, you've got polarity. Oh my God, it just deep dove polarity, which is indicative of we're actually breaking this move. And then you create your range trend, and you get into like the whole queue of final hold levels, final holds, final lows, all that different stuff that you get into. But often we don't see, because I've never taught it, we don't see that there's actually time frame down, pending on, again, if I wanted to. And I'm going to use the context of long this chart right now, because I'm going to say I'm longing this level, right? Which is actually short in reality because our chart is, but I'm going to say a long. So if we wanted to long the chart, which is going this direction, we would say we want to target the +1 for a long, which is this right here, +1. This means that the long is in play. If we wanted to short from here, like if the opposite was true and we said, here's a level we want to short, I want to go after the +1 for the short, your +1 would be here. So relative to the context of how you're using and communicating, and that's why I tried to communicate this earlier, you're going to get a little tongue twisted by saying, oh, +1 -1, +1 -1. That's relative to your interest, not theory driven on the charts, because this is an application based theory, right? +1 -1. So, in this case, it fills in the blanks. And often I like to think of an analogy where it's like, this is filling in the ripped out pages of a book. You have a book with ripped out pages. These are the pages that's giving you out of that ripped out book. You're like, oh, I can finally understand what happened at the end of this story, because again, you have 3 instances. You have backtest polarity, skyrocket up. Front run Polarity, and it's like, oh my God, dude, this thing is going to rip out of its mind. Or you have deep dive Polarity, which is, okay, let's deep dive Polarity, and this is indicative of breaking the move. So like whenever if you look at this chart, you can see, like, zoom out, backside Polarity, laddered the move, and we can see that laddering when we can go down time frame. Now there's a lot of really cool implications on this, and I'm going to talk about, before I go deeper into this theory, I'm going to talk about the first implication of +1 -1 when we go down time frame in terms of scalp trading. So there's kind of this interesting thing where if you were to always take this level, you're basically future-proofing or insulating your entries to give you perfect knife catches every single time. So in a scenario where we look at this in RA terms, or in terms of where can I get perfect entry, how do I insulate myself, like how do I create that you know, too many times people pick a level and it just, you know, it was correct in their direction because they picked this level and it was correct in their direction, but you know, they're trading 100x and they get liquidated here, and then it goes a little deeper and then it goes that way. So they were right, but they got punished anyways for being right. So like you have 3 entries here. You have this, oopsies, you have the daily entry here, you have the weekly here, or you have this entry here. For example, if we were to only ever take this trade, it will happen 1 in 7 or 8 times, but it will always be correct. So if you set like a short to this level, what's going to happen is you're rarely going to get filled, but you're never going to lose money. So as a knife catch, it's a perfect scenario. It means we get into a low amount of trades, but the quality is ultra high. Opposingly, this level can liquidate you. This level can also liquidate you. Are they going to hit more often? Yes, but they also have a higher amount of variance associated with them. So when we're talking purely about knife catches, there's kind of a cool application that we can use with this. Like if we had this daily level, for example, like let's flip the chart back over. Let's go to this daily level is hit. We can now go after that trail. Like, okay, here's the daily level. Where's the 4 hour? So what would be the 4 hour that's protecting that daily level? So you kind of have two things here, right? You have this would hold the move down and keep moving it down, and the 4 hour level that would break it. Well, we don't actually have one because we're at a point where we're backs are right up against Polarity here. So we're actually at a point where we have the weekly and the daily. So now you don't really have a 4 hour. If anything, you would have had this right here as the -1. Oh, sorry, as the +1 to hold this down, but you don't have anything above this. Like you'd have to go back in here and check. And you actually do. You actually have this right here, which is the backside. I didn't even see that before. But again, I haven't really looked because, you know, this is kind of the first time I'm teaching this. So you'd actually have, and we can delete that level there. So you'd have the daily, you'd have the level that it goes after. So the daily, this would break that level and this would hold it down, right? So, or this one here actually, because that test happens after. So then you've got like your -1 targets on the daily, right? So like if you were to keep going with that, now you can say, okay, we did the weekly and there's the 4 hour to the daily. So what's the -1 to the daily is the 4. So that breaks the daily. This holds the daily down. Okay, so we can kind of continue this trail. If that's true, then we can go to the 4 hour. So the 4 hour level would be, here is your hourly, right? So there's your hourly target on the 4 hours. So we're just going to put that there because that's the move that would break the 4. Aha, look, it just hit. And the move that would hold that down is actually the 4 hours there. It would be this level right here. So that would be your hourly, right? Because that's the 4 and that's part of that hourly range. It can't be above it because it actually has to front run it like this, right? So that's your hourly level right there. So you have, you know, your daily with the, and again, +1 -1 pending on your interest. If you wanted to short this 4 hour level, the +1 would have actually been the hourly level right here. So if you're saying I want to short, I'm going after this is the +1, and you can see how that breaks that 4 hour, and that 4 hours derived off the daily. If you wanted to go and break this move, you'd have to target this, and this would actually attack that 4 hour because that's the time frame down, the +1 -1. So if you were here and you said I want to break this move, I'm going after the +1 as a long, you would be wanting to go after this level. As a short, you could say I want to short the +1 to this, and the short to the +1 would have been there, right? And you can continue this trail. So now you can take that hourly and you can go down to the 15 and say, okay, well, there's the hourly. What's the 15 that breaks this, and what's the 15 that holds this move? So this hourly will have a 15-minute level right here that holds this move down. So you've got your 15-minute level right here, which is like, oh, that's the 15 that protects it. And the 15 that breaks it looks like it would be right here. There's the hour. This one gets a little tricky because you got that 4 hour right there too. So you would actually go after this level here. And I wonder if it would be this one. You've got one of two levels that could happen here. I think you need to mark them both. So you've got the 4 hour here. That protects the hourly. It would be this one. I wouldn't use this one here. It would be this one here, like that. And so that would be the one that breaks that. But again, you wouldn't be going after the 15 on this. Once the 4 hour breaks, you'd be going after that hourly. So that gets a little tricky. Like I said, like which level would you use it as a 15? You wouldn't, because actually once you're past this 4, you'd be going after its target up top. So when you look at it, when that trail of those 4 hour levels break, because then you can just continue this, like what would be the next trail to this right here? Like what would be the level that breaks that, and what would be the level that protects it? So you'd have to go to the 5 minute and you'd say, okay, well, there's not really a 5 minute level here. So it would be like breaking this trail of 5 minute hold level. So now you'd get into an effect where you're saying like, okay, we actually don't have anything left where we can go up. You now have to use like your trail of 5 minute levels. So like if you were to, oh, that one's broken. So you've got a hold level here. That's tested. So then you'd get into that trail of, okay, you've got that, that 5 minute here is tested. So you've got your backside valley here, which is also part of that. That's tested. And then you've got, this backside valley, and that's tested. So now you're getting into like kind of like a trail of levels. I'm not sure if that's the one. Yeah, that's the final one to test it. So like once you pass this, theoretically, you'd be gapping to that hourly there, because like all of this stuff is gone. And actually we need to change this color because that's a little confusing. It looks like a 15, but it's actually a 5, right? So then you create that kind of like a gap that you can see in the markets where it's like, oh, this 5 minutes shoots straight up to that hourly, because the 15 minutes done for, and you're now back to that 4 hour where you've already said the short happened on that 1 hour from the 4. So this would be the perfect short target. And then it boils down to this. And that's why you see such a disparity in this gap here, right to the target of the 4 hour, right? So there's kind of like this really, really cool and interesting application with +1, -1 that you can always use, where if you can identify polarity on a move, you can boil that polarity down to say, what's the +1, -1 target, application dependent if you're long or short. I'm just going to say +1, -1, so I don't have to repeat that. If you've identified weekly polarity, like if you've identified your outlying polarity, which is undeniably this, then you can say, well, what's the plus and minus target on that? Well, you go down to one time frame and it's like, oh, there's a daily. What's the plus and minus target on that daily is the 4. So then the daily would be derived down to the 4, and you could say, okay, that's a target you have to go on above. So if you're going to break this move up, it's going to hit that, and that's the target below. So if you hit this, you're going to break it down, and then you have to go into your hourly trail and see that. So like now we're at a point where we've boiled down all time frames to the 5 minute. You break that 5 minute, it's now gapping because this is gone, right? That's not there. Now you're attacking that level there, which is like, oh, you're just going after the 4 hours +1, -1 target, which is actually just the time frame above it. It's because every move has one time frame down which protects it, and one time frame which attacks it. Or one time frame that protects the move to move it down, and one that breaks it to move up. So then when you're looking at this trail of levels, it completes those gaps, and it shows you why you've gone after those targets and why you have those polarized moments. And we often get into this thing where like it's like, oh, here's the level, but it can front run it, or it could actually go and deep dive it. But that's what you're seeing. You're seeing the level, and you're seeing it divided down to its next target, what's protecting it and what's breaking it, right? So that starts to fill in those gaps, and how we use that +1, -1 as an application. And then you can also, there's more to +1, like this is one form of what +1, -1 does, which is really cool against polarity. But you also have an interconnection to trends as well. Like, you've got this, target here, which is your 15, right? So this was, ends up being a 15 target there. And then that gives you your trend that once this move breaks, right? Like you've got and I'll just make this green because it's connected to that 15-minute level. And this is derived off of different +1, -1 application theory. But this also gives you the range that needs to break this move. Oh, come on. There's also, when you're using +1, -1, there's an application of this as well with trends that gives you a different type of accuracy with range trends to see where gaps break and move up. So you can see even here that when you're able to use this 15-minute with +1, -1 theory, and we'll go over this a different day, how you use trends with it, because this is another whole other lesson with advanced theory. You can now see where you have the range trend that actually controls the gapping of the move. So you back test the 5-minute level, you hold your trend, and then you move straight to your next target, which is just a huge gap in the move, which is exactly what it has to do, because this 4 hour, the trail of those 1 hours, it actually broke that 1 hour trail down here. So this 1 hour here, right? If we add this piece to it, all of a sudden you're seeing where that trend is derived as we want to go long. So this is the +1, right? If we wanted to short, the +1 would be on this side of the chart here on that 15, right? Like that would be here on that 15. So like if we wanted to short, this would be the +1. But if we are going to long this chart, we have to attack the range trend that's created from the +1 minus polarity, because that's boiling this down to a different type of polarity, which is the trend that would be the 15-minute range trend above the 1 hour +1, because now this turns into a +1 because we're saying we're going to break this 4 hour to go after its +1 by breaking the -1 or the +1 short side. We'll call this the -1. We're going to break this -1 to go long by seeing its target break range trend. And so when you go to that, and that's a bit of a tongue twister, when you go to that, you get the perfect trend to break the final piece of that hold level, and the theory completes itself where you would have this trend breaks, it's breaking this hourly to attack that hourly. So you can see where all of this derives the perfect range trend to break and the final like hold level to gap. This was just like a nice coincidence here, but irrelevant because theory forward, it's just how it works, right? Like you can only +1 -1 down, and we did it all the way to the 5 minute, the final untested 5 minute level. And it could have even been something like this back here. There could have been like a polarized spot. I'm not exactly sure which one of it looks like it's this. Maybe this is like something else on a different time frame. Not really relevant for us, because the only thing we really care about here is either this backside or this test on, well, there's a 5 minute actually. I need to mark that as a 5 minute, not. It was the final hold level that was untested, which is like your backside here. You could go front side hold level here, but that also range tests here. So you go backside here in this case, because backside is like the perfect part of the move, right? And then it actually hits the front side right here. Oh, that's a shame. I probably would have taken the backside and cried. That's okay as a short, but it would have been a scalp. So it doesn't matter. Like either one here, when it tests to hit that, it's fine. You're not looking for the short anyway. So like, you know, if you're shorting here, it's like, oh no, I missed the trade, but it's probably for the best anyways, because, you know, it does hit the level here, which is all the same candle, which is that same range being tested. And that's fine. Like it's really irrelevant, because again, you're not shorting there, but you test your level to break, your breaking trend, you're holding over top of it. Well, of course it's going to gap straight to that. Like it's almost instant how it would go to that, because it has broken the trail of this 4 hour, which was derived from the daily, which is derived from the weekly. And it's kind of like your back is against the wall now, because what you're trying to do is this chart is trying to break up. In one sense of the way, it's trying to break up, but larger time frame, it's actually just laddering down. So now we can actually use this as the daily needs to break from the 4 hour range trend. You see how amazing that is now? Because look, now you've got, hey, here's the daily, where's the target 4 hour above? So in order to break this, which breaks this, which goes after the deep dive target, which starts to break, you now have your range trend that fills in all of those blanks, because that's actually, if you wanted to long, you'd have to say, okay, where's the daily level? It's right here. That is the 4 hour. And originally the 4 hour was here, but now we actually have the start of a 4 hour target above that. So if we want a long, we actually now just filled in our +1 target. So sometime out here in the future, whenever this happens, or if it happens instantly today, or like whenever this happens, it doesn't matter. This trend is now the one that breaks this level, because it was the for longs, it was the +1 target. For shorts, it's the minus target, right? Because for shorts, you would have wanted to stay below this. But now you have the perfect final trend, which gives you all your other architecture that comes through complete and allows you to see this. So it's really neat when we think of +1 -1 as an application base against polarity, because it fills in a certain part of the charts that nobody can ever see. And that's why I said at the beginning of this, it's almost like somebody ripped the pages out of a book and gave you those pages back. And they're like, here's the final pages to see the last chapter of this book. They gave you the missing pages out of a book by showing you +1 -1. So this is like a very, very advanced application against polarity. And there's a lot of work to do around it. There's a ton of thinking, and it takes a lot of practice to get really good with +1 -1. But you can see where, like, undeniably, when you take one time frame, and again, if we're on the 4 hour, we never go as an application against polarity. We will never go up to the daily and say, let's start building architecture to break that 4 hour that way. We will always go down and say, okay, +1 -1 against polarity. Let's go down to the time frame and find the target above it. So in this case, we're talking about the daily. Let's find the target above it, and let's find the target below it, right? So there's like this really cool splitting, or this really cool binary split. Like that's why I just call it +1 or -1, because that's why I've always named the theory that way, because it's just like this decision of zeros and ones, as it always is data on the chart. Zeros and ones is a science that we use. +1 -1 is just like, there's only zeros and ones in binary. There's only one data set. There's only one decision of the 0 or 1. I don't want to call it zeros and ones because that's weird. I just call it +1 and -1 because it's either going after a target short or long, top or bottom. So that's where +1 -1 is the name came as why I called it +1 -1.